Obviously, another brand new one. Just look at the name here, right? Where we get our Trump savings accounts coming in. This did not exist before. And for whatever reason here, the Senate and the House came pretty close to agreeing on pretty much everything here. So if you have a baby born sometime between 24 and 28, $1,000 that the government will put into this account. No distributions before age 18. So if let's say I have a new child born next month, government would kick in $1,000. I can put in 5 grand. Okay, so now we've got $6,000 in this account, and all of the amounts that are put in there, the earnings are tax deferred. A really nice way of looking at it, right? Your earnings are tax deferred, and this is a little bit different than an education savings account, because when we look at an education savings account or a health savings account, if you take the money out for qualified purposes, so let's say that I have a hospital bill and I've got to pay 5 grand of my deductible, I pull that out of my HSA, that's not taxable to me. This savings account is going to be different. And so if you have a qualified withdrawal and you take it out, you're taxed at long-term capital gains rates, okay, which has always been more favorable than ordinary income. If it's non-qualified, then it's taxed as ordinary income. So basically what you've done there is you've gotten all of the earnings tax deferred, but when you pull them out, how are they going to be taxed? Is it going to be 15% as a long-term capital gain, or is it going to be up to 37% as ordinary income? So the big question then obviously is what's qualified? Makes a big difference if it's qualified or non-qualified, right? So what does qualified mean? Qualified is for your a first house to put money down on it, get your down payment going, for your education, or for capital to start a new business. When I was starting to type this in, I also had healthcare expenses in there because those are almost always included, but they're not included here. So if you buy it for a down payment, if you buy it to pay off some of your college, or if you buy it, or if you withdraw the money to start a new business, get your business going, we get capital gains. Otherwise, taxed at whatever your bracket is.